Do you use the MACD? What is it? And exactly how do you actually use the MACD? But more importantly, does it actually work? All this are backed by research and our tests, and we'll be sharing all this in this video. Let's go. All right, so the MACD is the all-time favorite indicator. As you can see in the image over here, right, this is typically how do you actually play it. You play by the crosses. A lot of people play the MACD by the crosses. When the upper line crosses when the white line crosses the red line, however you want to color it, right? When one crosses the other, it will mean a bearish crossover and it will drop down. And on the other hand, if it's at the bottom, right, when one crosses the other, it will mean a bullish crossover and then it will go up. Does this actually work? So what we do at AFM, Asia Forex Mentor, is that we put all these indicators to the test so that you know exactly, can you actually rely on the indicator at every single time? Whenever there's a crossover, you go for the sell, right? A bearish crossover, you go for the sell. Whenever there's a bullish crossover, you go for the buy. Does it actually work? Can you actually use it all the time? So right now, I'm going to show you exactly what we do in our test to derive the verdict, right? So this is Bitcoin, right? We did a test on 3 pairs. One is crypto, which is Bitcoin. One is a stock, and then we use Apple as the sample for this test. And then we use Forex, all right? In Forex, we use the euro dollar for the test itself. Okay, so let me make my screen smaller. Yeah, all right, okay. So in this test, we did the test on the crossover, right? We did it on the daily time frame. And so whenever there's crossover, right, in this scenario is the blue line and the red line, right? We did a crossover. So whenever there's a crossover, the moment when it crosses with a bearish bar, we go for the sell, right? Let me zoom in slightly bigger, all right, over here. Whenever there's a crossover over here, let's say the moment when it crosses, so I plot a line, right? The moment when it crosses over and it closes, we go for the sell. And the moment when it crosses back up over here, which is here, the moment when it closes and closes beyond it, we go for the buy. So at the sell, which is here, the moment when it crosses, which is here, we went for the sell here. And at the moment when it crosses back out, we got out, which is here. Right, so the distance from here to here is the profits. And then the stop loss, it could be played in various ways, but to put it simply, maybe we just want to place it above the bearish bar that closes beyond it. So it's something like this. So this is how we gauge whether or not does it actually work. So we did a couple of tests. Number of the times how many times did it actually work? So out of the last 10 times, right, what is the hit rate? Which means that how many times did it actually work? Because if you see, what happens is that over here, there's a crossing, right? And then we got out here, right? And let's say over here, there's a crossing, and then we got out here, right? So in this scenario, it's rather flat. Or we can say over here, there's a crossing, and then we got out here. So it's also pretty flat, not too profitable, right? And then over here, there's a crossing, which is here. And then we got out over here, which is also flat, therefore not profitable. So we did a test on this. And then next, on Bitcoin. And then we did a test on Apple, a stock. So we want to see that, can you actually apply the MACD in the stock itself? So in this scenario, this was actually quite nice. You see this big drop. All right, so the selling was here, which is somewhere here, right? Somewhere here. And then eventually it tumbled down, right? It tumbled down, and then it forms the low, and then the crossing was here, which you would have got up for, you would have caught the highs, and then you would have caught the lows, right? So it did help. But then we ran more tests, like for example, from here to here, didn't really work. And then maybe we wanted to test from here. Let's say here, this was nice, but along the way, there's a lot of you can see a lot of false crossing, right? So we need to identify, you need to learn how to identify the false crosses, right? So let's just say you entered over here and then you got out at here. So that was all right. And for here, right, you see this crossing over here? We entered here for the sell. But when it crosses back up here, we got out, so it didn't really work. Then you got back in again for the sell. This time around, it worked, and then it went out at the lows, not really the lowest point, but the moment when it crossed, we got out. So yeah, it did kind of work as a whole. So we did a test on Apple, Bitcoin, and also the euro dollar for a forex pair. Euro dollar is the tricky one because we use same thing on a daily time frame, but there is so many crosses. You can see so many crosses, which from this sell here to this buy here is actually flat. From this buy here to the crossing here, a little bit profits, right? From here to here, this was slightly better. And either way, either how, we did the whole series of tests, right? Let us first talk about the pros and the cons of the MACD. The pros of the MACD is that it shows strength, the strength of trends. So for example, we do not typically go for the crossover in the middle area. We want to go more at the crossover at the overbought area or at the oversold area, right? So that's where the crosses becomes better. So which means that you want to go somewhere at highs. You don't want to go in at a crossing somewhere in the middle zone. We want to go to the upper zone, right? The upper zone and the lower zone. That's where the crossing will be better, right? So it shows the strength in the trend if done right. The cons is that it identifies the trend late, because there will be times whereby, let's say the market has already gone up. Let me show you an example. Say Apple. Okay, this was good. Let's say. Okay, let's try Bitcoin. Okay, this is the lows. So the crossing is here, but the lows was here, right? So understandable, bearable, acceptable. Or we can go for the lows. So the crossing was here, but then it went down lower. So may or may not be the best indicator at identifying the lowest position. So here was a crossing. Yeah, this was nice. After which it did go up, right? This was a selling, and then it did drop down. So that's not too bad. But overall, being an indicator, it does identify trend late. Not exact point. In fact, there's no indicator that is able to identify it at the exact point. So it's a common con, right? Next, the pros. It shows the overbought and oversold areas, right? Which is good, right? We want to sell at an overbought area. We want to buy at an oversold area. The cons is that based on the MACD itself, it does not provide a very good entry and exit signal. Not ideal, because sometimes it may drop down. It may cross as what we can see, but then it may head up further. So does not provide a very good entry or exit signal. The pros is that it is flexible and customizable to your trading setup. This is the reason why traders use MACD. We do not use this as an indicator alone. We use it in combination of other indicators. And it's very flexible so that you can add it as a base. It's not the main one, but we can use it as understanding. All right, now we are in the overbought area. Now the MACD has crossed. Now let's see, should we, is this a real time to go for the sell? That's where you can decide, right? So it's flexible and customizable to however you are trading, right? The cons is that sometimes it provides a choppy signal, as you can see in the euro dollar. Oh, there's so much up downs over here. A lot of crisscrosses over here. So many crisscrosses, all this, right? So many crisscrosses. So it's not that ideal at times of choppy signal. So you want to differentiate them by using the overbought and the oversold area, right? The last pros behind it is that there's multiple ways to utilize the indicator. There is also the divergence method. There's also the convergence method. This is something that we cover in the rest of the videos, right? But for this video, we cover MACD as a whole, primarily using crossover. So we did a test. The analysis is based on the entry after the MACD crossing, right? Using the overbought and oversold area. We exit only after it crosses back, right? It crosses back, right? For the first time. So for example, it crosses at the bottom to go for the buy. And the moment it goes up, the moment it crosses back, that's where we go for the exit. And then we calculate the entry point to the exit point and to the risk point. So the risk reward ratio, right? So we use for this test, we use the default MACD settings, 12, 26, 9, right? And this is our testing frame for entire 1 year. All right. So for the Forex pairs, right, we use euro dollar as the study, right? And the win rate is 3 out of 10. So what this means is that for every crossing at the overbought area or at the oversold area, we go for the buy or the sell at the top. And then when it goes up and then it crosses the moment at the next crossing, we get out. So by using the MACD alone, in the euro dollar, the win rate is only 3 out of 10 trades, right? The average risk reward ratio is around 1, right? It's around 1, meaning that the entry to your risk to the moment when it crosses back to the reward is around 1:1. So the profitability is that we lost 7 out of 10 trades, and out of that 3 winning trades, we only win like 1. So we actually had a loss. We actually had a loss of in percentage gain. If you just risk 1% per trade, we lost 3.73% out of 10 trades. So it wasn't a winning setup. We tried on stock, on Apple as a stock itself. The win rate got higher. In fact, that is an interesting test that we had. The win rate is actually better on stocks if you want to use the MACD crossover. We won 4 out of 10. And the risk reward ratio is better. It's around 1.5, 1.6. So, and then when we run out of the last 10 trades, we actually managed to make a little bit of profit, about 0.3% based on the crossing itself. So it's worth considering looking at the stock itself if just using this as a indicator. Not the best way, but at least it is around break even to profitable. Yeah. Lastly, we tested on crypto. We use Bitcoin. The win rate suck. It's only about 2 out of 10. The risk reward ratio is also around 1:1. So we had a loss out of 10 trades. We had a loss of 5.88% with a risk of 1%. So the verdict is that the MACD has a crossover. Okay, crossover has a poor win rate. If you want to use this alone, the win rate is very low. 3 out of 10, 4 out of 10, 2 out of 10. Yeah. And the risk to reward ratio, if you just want to play on the moment when it crosses, you go for the buy. The moment when it crosses back, you go for the closing, you go for a TP, or you sell, you closes the trade. The risk reward ratio isn't that good, right? It's around 1:1 to 1:1.5, right? Hence, deeming it unprofitable on its own in terms of crossover. However, there are more advanced ways to utilize the MACD that may potentially ensure a higher winning rate. Of course, when it crosses, when maybe you want to combine with some other stuff so that you get in a better entry, the moment when it's about to cross, you get in at you get out at a slightly higher point before it finally crosses, right? Combining with different indicators, which we'll cover more as you go along in our series of videos, right? It is flexible, it is versatile, right? Because this is used in combination. It doesn't conflict with a lot of other pairs, other indicators that you can use or patterns. If it's anything, it helps in aiding you to understand whether or not is it a real low or whether or not is it a real high. So the MACD is still one of the most utilized tool in majority of the setups. We rate it a 6 out of 10, although the crossover itself is not profitable. But because of the many ways that you can play the MACD, this is something that I think you should add in your charts to aid in your overall reading of the market. If you use alone, it is not profitable. If you combine with the rest of the stuff, then you can increase the risk reward ratio, you can increase the win rate, and of course, then the profitability will increase. All right, so MACD, this is how we use it as a crossover. I hope you like this video. If you like this video, please give it a thumbs up, please subscribe, and leave a comment below to let me know what you think. All right. So do follow us for more videos at Asia Forex Mentor. This is something that we do every week, whereby we cover every single indicator and to give you our test, our analysis, how to use it, and whether or not should you use it as a standalone or as a combination with the other indicators. So let me know what you think, and I'll see you on the next video.